Welcome to the Daily Market Recap. Today is Tuesday, June 2, 2026. What an absolute battleground we witnessed today. The market ended on a highly uneven note, but the underlying bullish energy somehow pushed SPY to yet another historic record close, creeping up 0.13%. Meanwhile, the tech-heavy QQQ inched forward by a mere 0.03%. The primary driver behind today's mixed madness, a massive tug-of-war between an explosive AI-fueled chip rally and jaw-dropping economic data that completely threw cold water on any remaining interest rate cut. Hopes for 2026. Diving into sector performance, technology and hardware were the clear playground bullies, flexing massive muscle throughout the session. Semiconductors and AI infrastructure soaked up almost all the liquidity. On the flip side, defensive and rate-sensitive sectors like utilities and real estate took a nasty hit as long-end treasury yields held their ground, and traders braced for a higher-for-longer regime. Let's take a look at the temperature of the street via CNN's Fear Greed Index. Today, the gauge cooled off just a bit, slipping down to 57.1 from yesterday's 59.2. Make no mistake, we are still sitting comfortably in greed territory, but the slight drop reveals that institutional players are beginning to buy structural insurance as the index tests extreme highs. Our top macroeconomic shocker today came from the Job Openings and Labor Turnover Survey. April JOLTS data unexpectedly surged by 4.6% to 7.6 million open positions, hitting its highest level in nearly 2 years. While labor stability sounds great, Wall Street immediately freaked out. Money markets have now effectively priced out zero chance of Fed rate cuts for the rest of 2026, with odds actually shifting toward an eventual interest rate hike by year-end. Talk about an economic plot twist. In corporate shockers, Google's parent company Alphabet triggered massive shockwaves after announcing a mind-boggling plan to issue up to $80 billion in new stock. The company plans to use this massive cash mountain to fund its aggressive, non-stop AI computing infrastructure build-out. Shareholders weren't thrilled about the near-term dilution risk, causing the equity to slide 4% on the day, acting as a major anchor on the broader indices. The absolute spark plug for today's market came directly from NVIDIA's kingmaker, Jensen Huang. Bloomberg reported that Huang explicitly called out Marvell Technology as the next potential $1 trillion firm, emphasizing their deep $2 billion AI networking collaboration. This ultimate stamp of approval sent shockwaves across the chip sector, lighting an absolute fire under tech bulls. All right, let's dive into today's leaderboard to see which stocks won big and which ones got absolutely wrecked. Leading our explosive winner circle, we saw breathtaking breakout momentum from MRVL, VSXY, HPE, MGM. First up, Marvell Technology absolutely exploded by over 32% after NVIDIA's kingmaker, Jensen Huang, explicitly anointed them as the next potential $1 trillion chip giant at Computex. Not to be outdone, Victoria's Secret celebrated its brand new ticker debut by skyrocketing nearly 40% after completely obliterating Q1 earnings expectations and hiking full-year guidance. Meanwhile, Hewlett-Packard Enterprise printed a vertical 30% gain following a stellar earnings beat of its own, proving that global enterprise demand for AI server infrastructure is nowhere near hitting a wall. And finally, Casino King MGM found itself in a high-stakes breakout, surging on news of a massive all-cash acquisition proposal from Barry Diller's IAC. On the darker side of the street, capital rotation, heavy corporate dilutive announcements, and sudden margin fears absolutely slaughtered a few crowd favorites. Getting severely dragged down into the red zone today, our top market casualties were Google, TSLA, NI, Mara. Let's map out the structural war zones on the charts for the benchmark. SPY, the absolute line in the sand, sits right at the high-volume pivot of 756. As long as bulls defend 756, the immediate upward target points straight to 758 and psychological resistance at 760. Lose 756, and sellers will instantly hunt down 754 and the major structural floor at 75. Over on the tech-heavy QQQ, things are looking highly compressed. The ETF is coiling tightly within a Bollinger Band squeeze phase. Key short-term support rests directly at 740, with a deeper 50-day moving average safety net waiting down at 731. On the upside, bulls must forcefully clear 745 and 750 to trigger a structural short squeeze. Small caps are continuing to show an uneven range-bound personality. For IWM, the immediate line of defense stands firm at the 210 and 12 support zone. To break out of this multi-month consolidation pattern and catch up to Big Brother SPY, the index needs a clean daily close above heavy overhead structural resistance at 220 and 1225. Shifting over to the crypto sandbox, it was a decidedly bloody session for digital assets. Bitcoin futures tumbled more than 3%, breaking through the critical psychological threshold of $70,000 to slide down to around $69,000. This macro-driven de-risking instantly cascaded across altcoins, dragging Solana down beneath the key $80 mark as traders flushed out leverage. The main headline dominating crypto circles belongs to corporate Bitcoin whale MicroStrategy. Instead of panic selling, they capitalized on the market dip by executing a brilliant capital management move, retiring $1.5 billion in convertible notes at a discount. This clever liability management effectively reduced dilution risk and successfully boosted their Bitcoin per share metric by 12.6% year to date. Wrapping things up, the overall market sentiment heading into tomorrow is one of hyper-vigilant caution, while the AI-driven mega theme continues to act as an unstoppable structural shield for indices. The sudden realization that the Federal Reserve is trapped in a hawkish box means breakouts might face heavy overhead fading. Keep your eyes glued to your screens. Early tomorrow morning, we kick things off with MBA mortgage applications at 7 a.m. ET to test consumer demand, followed by crucial macro commentary from Fed Vice Chair Michael Barr at 9 a.m., and the highly impactful factory orders data dropping exactly at 10 a.m. Eastern. Trade smart, manage your risk, and I'll see you at the next bell.